What's up guys, it is Sam here from Sam and Gino Talk Money, and today I'm going to look at the stocks of Meta, Microsoft, Google, Alphabet and Amazon. They all reported their numbers this week. I'm just going to go into what has actually happened with them. Is it positive or is it negative? And it's been a topsy-turvy week in the stock market because of these earnings that have come out. These are just the big names that I'm going to focus on today, but there's plenty of other stocks that actually did report as well. So we're going to get straight into them. What I briefly kind of think, do I own them? What am I buying? Am I doing any action because of this, or am I just kind of sitting still on the stocks I already own? So guys, look, without further ado, I'm going to get straight into this video and just explain a little bit about what the big guys have reported this week. And look, guys, remember to hit the like button and subscribe. It helps out an awful lot, and I'll see you in the video. So guys, welcome, and this is the first stock I'm going to look at, and that is Meta Platforms, otherwise known as Facebook. So everyone thought that this stock was dead and gone over the last couple of months. It crashed rapidly all the way down to around $80 a stock, which is absolutely crazy. It's had a monumental pullback in the last couple of months. I'm just going to look at this and see what has actually happened, what they've reported in the first quarter, because people would have probably expected there to be a bit of a disaster considering all of the rate increases and people saying there was going to be a recession. So guys, like in the first couple of months there, Facebook actually increased from last year 3%, which is something was not expected. Their costs have increased nearly 10% from last year, and their income from operations has decreased by 15%. And their net income is actually down 24%, and this is kind of what has caused the restructuring at Facebook. They've let a lot of people go, and this is kind of seen this as one-off time payments. They've had to pay people to make them redundant, so you should see this improving in the second quarter. And the earnings per share is down 19% as well to $2.20 per share. But look, they're still earning an astronomical amount of money, and also the tax rate is also up as well. So you also want to look here at Facebook, because what it is you're seeing how many people are using this platform, and 3 billion people on average use this in March across all of their family of apps, like your WhatsApps, Instagram, Facebooks. So that is an increase of 5% year over year. So it's just shy of half of the planet is using these apps. So monthly active people is looking at 3.81 billion, which is also a 5% increase as well over the month. So you're seeing 3 billion people using it at least once a month, and 3.8 billion using it monthly, which is great. So Facebook has increased 4%, increased 2% as a total. And look, you're seeing increases pretty much everywhere here, especially looking at the revenue increasing 3%, which is very, very good. So looking at costs and expenses is what I touched on earlier. They've had to pay to get rid of people, which has kind of cost a lot as well. They've repurchased 9.22 billion of their Class A stocks. And yes, that's pretty good. They've got a lot of cash on hand, 37.44 billion, and their long-term debt is pretty low in comparison. So they're trying to decrease the headcount, decrease of 1% every year, and this is going to continue as they announce more and more layoffs. But look, overall, it's a pretty good quarter for Facebook and Meta, as is now known, which look, it's pretty positive. So the stock price has seen this, so if we just go over here and we can look at the stock price. So since the year to date, it's gone from 124 to 240, which is nearly 100% increase since the start of the year, which is fantastic for Facebook. The valuation now is getting a bit more normal at 24 PE. You're looking at statistics and a 4P of around 21 PE, which is also pretty good. And look, their analysts are forecasting them to grow at to 7.8% this year and 11% next year. If they do meet them numbers, it would be absolutely fantastic. So yeah, overall, a positive quarter for Facebook. I don't currently own it myself because I'm focused on one of the other guys, but it is definitely one to watch at the moment. Next up, we have Amazon. So Amazon, the growth company of all growth companies, increased their sales by 9% to 127 billion compared to 116.4 billion in the first quarter of 2022. Look, all of these companies are citing like unfavorable impact to year-over-year foreign exchange rates, which is not great. It's affecting the bottom line, but yeah, growth to their business is on all levels. So North America segment increased 11% year over year. International segment increased 1% year over year. Operating income has increased to 4.1 billion in the first quarter compared with 3.7 last year, and so like that's very, very positive, especially when you go down to look at the net income, which is 3.2 billion for the first quarter compared with a loss of 3.8 billion last year. So they're back on track to profitability because their margins are very, very thin on a lot of the products that they sell. They make a lot of their money from the AWS segment of the company. So yeah, their operating free cash increased 38% to 54.3 billion in the trailing 2 months compared to 39 last year, and their free cash flow has also improved. But what you're really looking at, we're looking at a massive increase really for Amazon over the last year, and I think it's pretty positive. So is there anything else here I want to just touch on? And no, I think that's pretty okay for Amazon. Look, they've increased their revenue. AWS has also increased around 16% as well, which is very, very positive for Facebook, and it will probably continue for the foreseeable. Obviously, that growth will stall at some point, but it's pretty positive. So we're looking at Amazon. They actually just reported yesterday. You're probably going to be seeing this video Friday or Saturday, but yeah. So Amazon, year to date, has been pretty positive too. So they were down at around 85, up to 102 now. So look, Amazon, there's issues with Amazon that I have. It's a very, very expensive company for the profitability that it gives. For God's sake. Okay, go back. Amazon. Alright, sorry about that. So Amazon is a lot of profitability problems with it. So if you're looking at the statistics on Amazon, they're not currently having a trading PE because they made no money last year. Their forward PE is 61, which is extremely expensive because they just don't have a massive margin business. So to see this come down, like to be wanting to invest in this, I want to be seeing this probably sub 70, which would be nearly a 35% to 40% drop in Amazon stock price, to want to consider buying it because it is so expensive compared to some of the other companies that are out there, even though they do seem to have a lot of growth still in them, and 5.9% for this year and 14% for the year after. So they're still thinking there's going to be a lot of growth with them. Personally, I'm not buying it. It's not one that interests me at the moment because the numbers are just making it too expensive. I want to see a 35 to 40% drop in that stock before I'd even entertain looking at it properly. Next up, we have Google. So Google is a stock that I do own, and it was good to see that they did consolidate revenues and they were up 3% year over year, which is extremely positive. One thing that you do look at though here is that their margin has decreased to 25%. And then you're seeing that the profit has actually gone down, even though revenue has gone up slightly. So it's not as bad as it could have been. It was pretty positive overall. And they've also done massive layoffs as well, which will obviously start to help the bottom line as well to increase the profitability of the company, which is all positive for shareholders, obviously not for the employees, but that's what they're looking at. So here you can see basically a breakdown of revenue that has come in. You can see that Google Ads has just increased, YouTube Ads has decreased, and YouTube Network has also decreased as well. Google Other has increased, Cloud has increased, and Google Services has slightly increased, but the major growth was seen in Google Cloud. So yeah, when you go here looking at this, you still see that this is the first time that Google Cloud has become profitable. Yes, Google Cloud has become profitable for the first time with 191 million in profit, whereas it was making a big loss to the bottom line on previous occasions. So, yeah, Google pretty positive. Look, they've all dealing with the same things like increased costs, and then having to cut headcount. It's all kind of dealing with the same stuff. But look, we'll look at what their stock has done since. So, yeah, this week nothing major. It went up about maybe 3% this week, but it's a very more attractive valuation when you compare it to Amazon. They actually have a trailing PE of around 22, 23 nearly now. Get into here, and they have a forward PE of 19. Look, they're still marginally expensive, but you're buying like the moat of companies. Like these companies, everyone goes to them for a lot of their services, and moving away from them is quite difficult. So I wouldn't read too much into that. And look, they are estimated to grow 5% this year and 11% next year, with 32 analysts covering them. And their EPS is also like expected to grow as well. So Google is one I do own. I do have quite a bit in Google, and look, it's still at a pretty interesting valuation. But ideally, to be adding more, you would want to be sub 100, maybe even sub 95. And yeah, look, it's pretty attractive. So the last one is Microsoft. So Microsoft probably had the most price action based off their earnings. So the revenue increased 7%, their operating income increased 10%, and the net income was up 9%. Based on the current constant currency stuff, it would have been even better numbers. So yeah, they're citing that as hurting the bottom line on all of these companies. So yeah, everything is pretty much up for Microsoft, and it's hard to kind of look against Microsoft really. Their cloud revenue is up 22%. As well, which is really good. You've also got their service industry and stuff is obviously doing pretty well, and I think they're guiding pretty okay. So Microsoft is something that you could look at, and then as I went to look at the price action, you're seeing what Microsoft is actually getting for their price, and you're looking at around a 33 PE, which is a kind of expensive. Based on that, their growth is limited. Like they're not going to grow 20-30% very quickly. Like, so it is a limited growth company, and it's not something that like really interests me too much at the moment. Like, so you've got a forward P of 25, and look, you've got them estimated to grow 6 and 11%. It seems all these big tech guys are estimated to grow at around 6 to 7 and 11% next year. But yeah, look, it doesn't interest me. I probably want to around sub 240 be something that I want to look at. So I think there's room to move a lot for Amazon and Microsoft in a big way, and Facebook and Google are looking pretty attractive where they are. So look, that kind of sums it up. That sums it up. That sums up my video on these stocks. And yeah, look, I just wanted to touch on what they're all about, what's been happening with them since they reported this week. They are pretty interesting. And look, let me know if you are making any moves on these stocks. If you've learned anything from this, do let us know. And look, I'll see you in the next one. Thanks a lot, guys.